All right, good morning, everybody. Good afternoon. This is Trendy John from Simpler Trading. We are going to start our broad market analysis. We'll be covering today, which is the 2nd of June. And again, happy June, right? Beginning of a new month. And we'll be finishing out talking about all the way until the 7th. So, again, covering 2nd through the 7th for this week. So, this week's major U.S. economic reports and Fed speakers, as always, this is possible catalysts in the market that could cause volatility. Again, we are professional supply and demand traders. Our idea is to find the supply and demand, align ourselves with the bigger money, and coach you and help you to understand how to execute with the big money. So these catalysts, I just want you to note what time they are, but I don't want you to be afraid to execute the trades. We have shown you proof of concept for a very long period of time. As a matter of fact, we came to the end of our 30-day challenge. Our challenge was to create confidence and consistency with you all. And I believe we did very well because many of you, and I say many, joined the Trendy team for at least a quarter and most of you for a year. So we are very happy to have you in this extended family. Again, thank you so much for being here. Now, I do want to remind you, we had a question. Hey, are you guys going to do another challenge? And if you weren't on the mic and you didn't hear me say it, every day is a challenge. Nothing ever changes. We are going to do the same thing day in, day out. Trading is a challenge, right? It's not always easy. So we're going to come in here and put our best foot forward, just as always. So Melissa and I look forward to trading with you going forward. Let's go ahead and talk about this week's major U.S. economic reports. The things that I noted here, we come into Monday, we have some PMI, and this is Eastern time. And then 10 o'clock, we have some construction, spending, ISM manufacturing, auto sales, Tuesday, factory orders and job openings, and then Wednesday, ADP employment, ISM services, US trade deficit, S&P flash US PMI. And then on Thursday the 6th, we have initial jobless claims. And then Friday the 7th, consumer credit. I don't know if they just if this is a typo, but it came in at 3 p.m. And then we see here at 10, wholesale inventories, 8:30 US employment report, US hourly wages, and so forth. So, not a whole lot going on here, but there are some catalysts out there again that could cause any kind of volatility in the market. And of course, with elections around the corner, I would imagine there is going to be some surprise mentions out there, whether it be about our current president or for anybody that's running. I'm sure volatility that way could come into the market. Moving on, the next thing that we want to be looking at is our earnings. And I like to come over here on X and use right here at eWhispers. This is one of my favorites. It is my favorite. I apologize to follow for what's coming up on the calendar. You guys can see here, it's pretty light as we're getting closer to the end of the earnings season here. But there's a couple names out there that you might be familiar with. Far as Tuesday, we have CrowdStrike. And then Stitch Fix, I've always brought this up because I'm not a huge fan of it. And ever since I brought it up, it just keeps going down and down and down. You can take a look at it. I know that this is just a personal opinion, and that's why I like to see how they do, is when I used the product, it just wasn't the greatest for me. And I thought it was super expensive. And with inflation the way it is, it just didn't make sense. Dollar Tree, DLTR. Lululemon coming in on Wednesday, Victoria's Secret, Five Below. Again, these are just names that I'm familiar with. Campbell's, and on Thursday, DocuSign, Big Lots, Zoomies, Tilly's, and other than that, that's all I have for earnings going into this week. Nothing that exciting except for maybe Lulu and CrowdStrike and Dollar Tree. Moving on, last week's neutral results. I'm going to bring this down. This is the room right here. Bringing this down, you guys can see things worked really well. If you go back to the BMA, I was cautious last week. We did get the pullback. We did get a trigger long, if you will, here on the neutral strategy. It didn't last long on either side. It broke down very quickly. Once we broke down below the cloud, things were looking a little ugly. It went from green to red. We did get the short signal here. You could have played this to T1, T2, and T3. And if we go back to the BMA, you'll hear me say that I was looking for buyers to step in this area as we had demand down there. And then on the QQQ side, not only did we break all three of these, but I did highlight the demand zone that I was interested in last week. I did not put a target down here. To be quite frank, I didn't think we were going to come in here last week, but we did. But this is exactly where we found demand. We found buyers step in. It came right off the trendy edge as well. You can see that purple line. Buyers did swoop in, and we had a really nice Friday. Matter of fact, QQQ trade, right? You guys were probably like, man, this is not going to work. And I think at some point I was probably thinking, yeah, this could work. I remember thinking that as I added into my last options there. We ended up closing out plus almost 500%. And those actually went up to about 10 to 12x, maybe just a tad bit more. So if you held on to those, that was a great reminder that demand does work. And you just never know in the market. So crazy, crazy results there on Friday. And not only that, but we got to sell a lot of our winners like John Deere. Let's see if we come through here. And by the way, the API on the alert side, we were fixing some things. So that's why you don't see the percent gain here, but all should be well going into next week. I think this was a plus 50%. We sold DE for $7 for those options. IBM, Mel did, let's see, she sold to close. She did well there as well. There's those QQQs for 400%. Oh, QQQ trim here. These are just trims from those calls. And then moving up here, I know there was another trade. Oh, McDonald's. I sold this at 9. This actually ended up going to almost 12. And this again was almost, I think, just over 50% for these. So great trades that we had last week. Great results. Mel's NEE trade did very nice. I love it. We just we just have been doing very, very well, and I hope that you're really enjoying your time here. Remember, alerts are just proof of concept. It's a byproduct, I believe, in following a process. And I don't personally, if you know anything about me, since I started trendy trading way back in the day, I always said that I don't like using P&L to I just don't like putting the focus there. I just don't think it's important. I think education and I think a process and patience and teaching consistency and confidence is where it comes from because a lot of traders can have the right levels, but it doesn't mean you're going to be successful. So I've been doing this a long time and I know that practice and getting into your groove and understanding your allocation is really where learning comes from. So again, I like to show you how we do by using our API alerts. I think it's amazing, but that's not where my focus is. Again, that's just a byproduct of a good process, okay? All right, so this week we have a new neutral strategy, and this is where I'll pull this up. These are our new levels. So if at this point you want to go ahead and hit the like on this video, please, and please share it with your friends and family. I'm sure you guys know people out there that are probably struggling with trading, and I know if you've been here for the last several months, then you know that we have a very sound product, and I hope that you can refer your friends and family to come here to simpler trading and into the trendy trading room. Now, this is where we place the levels on our charts. This is for SPY and this is for QQQ. This is the neutral strategy. If you need to learn how to trade this, please watch the quick video on my YouTube. But it really is straightforward. If we can break to the upside over the top of the neutral, I'm looking for these targets. This is where we trim our positions. And if we break down again, this is where we go short, looking to trim into these positions as well. This is your SPY and QQQ for this coming week. All right, so next thing we're going to look at is the bigger picture. So let's go ahead and do that by using Trading View. All right, and let's go ahead and type in SPY here. Now this is going to be on a quarterly chart. Very important for you to understand. This is for my traders that are interested in the big picture. But even if you're not, this will really teach you a lot of patience because, like this past week, you would think, hey, the market, John was cautious. We did pull back. There were several reasons for that, including the skew, the TNX, which is the 10-year treasury, the dollar. All of these things were saying, hey, be cautious. We were cautious, but we were still adding in on those dips because the overall trend is very bullish. Notice that at some point, if you were watching the quarterly, this actually went inside, but we ended the week with it being still three white soldiers here, and still a very bullish pattern. Matter of fact, the only thing that happened here on my notes, a pullback this past week into the weekly 9 EMA or the weekly trendy cloud, and then a vicious bounce into Friday's close. Vicious as in if you went short and you try to stay short, you got, your butt handed to you. If you were paying attention to the bigger trend, which is really what we're focused on, then things worked out very well. Examples: John Deere, NEE, QQQ, um, all of these trades that we did very well on. The June candle closed on a higher high, which was the monthly. So what I mean by the June candle, the monthly closed on a higher high, and the weekly structure is an inside and down. So I wanted to put those notes on there just so that you're aware that the weekly is an inside and down. And we'll talk more about that a little bit later when we get into our futures charts, which comes at the end of this. Matter of fact, I want to make sure a lot of you may not know this, depending on how versed you are in YouTube. When you watch my video, you don't have to watch it at normal pace. I actually like to increase the time so that when I'm listening to anyone that I want to learn from, then I will put it at like 1.5 times the speed. So you can still understand what people are saying, but you don't have to sit here and spin in it. I might do this video for 30 minutes and you could cut your time down in half just by listening very quickly and seeing the charts and so forth. Okay. So this is the important part. Bulls need 530 plus on the SPY, and bears need below the weekly 9 EMA. Like they came into the weekly 9 EMA this past week, but they found value there, is exactly what we would expect. So anything between those levels is noise. So again, concentrate on the big picture. Understand after a big move like on Friday, that most likely we are going to digest for a day or two. I could be wrong. If we get continuation, that's awesome. We have a plan for that. But usually after a big move like Friday, it's going to get choppy. So just understand that cycles, they typically run 2 to 3 days up, and then 1 to 2 days basically sideways after a big move like this. It might look something like that. And then again, cycles to the downside, usually 2 to 3 days down, and then we're looking for a bounce. So this could be what we're in for. The easiest way to do that on the SPY, the Qs, or anything else is find that high from Friday, okay, and then find that low, all right, from Friday as well. And as long as we're hanging above 23 and 38% of that move, then it's just noise. Things are just kind of bouncing around. Okay. Let's go into the QQQ. All right, over here, same thing. Pull back this past week, put us price simply came back to the weekly 9 EMA and the trendy monthly edge and bounce. That's what we would expect. The bounce was not as convincing as the SPY bounce. Bulls will need $453 and a half, and bears need below 443. Everything between is noise. You can see we're at 450. So again, everything between these two levels is noise. Those are my two major levels coming into this week on the QQQ. All right. Let's go ahead and move on. We're going to take a look now at the DXY or the dollar. Why is this important? Don't try to overthink it. It's pretty simple. If the dollar's moving up, the market's usually like a little bit more on the cautious side, and you could see the market move down. Okay. What I'm concentrating on here is not a monthly candle. I'm actually looking at anywhere from a weekly, a daily, and a 4 hour. We're going to look at the weekly. Everything's worked really well here. You guys know the story. We got super bullish back in October when we hit supply. The dollar dropped. We did really, really well. Then the dollar hit demand. It came up. The market still did well, but then it got a little shaky here and there, but continues to do pretty well. And then as the dollar moved up again, the market started to pull back a little bit. We hit the supply zone and the trendy edge again. We pull back, the market does really well. And now we're just kind of sitting equilibrium between supply and demand. Anytime the dollar fluctuates to the upside, we get these little minor pullbacks. But here, what I wanted to note on the weekly is this is what we call a double inside. This is your initial candle. So going back to our first class that we had just a couple weeks ago, you guys understand what that means. This is a double inside candle. So usually what we see when we have double insides is a bigger move. Now I'm not going to sit here and be over convicted that it has to come down into demand or it has to push up into supply, but we have tested supplies several times and you could see that it rejected. So my overall thought is the probability suggests with these topping wicks that we see demand first. But again, I don't want to marry or be convicted of that because I think that can put you on the wrong side of the market. Let's just say that price is king. If price drops below the cloud, probabilities are higher. We're coming back for demand, and I would expect the stock market to continue to push to the upside. If price moves up and over, say right in here where I had this DXY crossing 105.37, then be cautious as it looks like it's going to try and push closer to the supply zone again. Okay. So again, we're equilibrium, and a lot of times, anytime we're between two opposing zones, things get really choppy, and it's very easy for traders to speculate and kind of lose their ass, if you will. Let's go ahead and move down to the TNX, which is the 10-year Treasury. We're going to take a look here. Same thing. The TNX got a little bit of oomph behind it this past week. And because of that, right in here around Wednesday, I'm sure the market was a little bit frightened, cautious. We know that we got pullbacks this week. But as soon as it came down into a little bit of support and started to pull back out of this supply zone, then the market started to look really nice there on Friday. Now, it did close right here at the cloud and right at it inside and out formation, which means we could find support in the TNX, which means the 10-year Treasury could push up again. It's really on that cusp, just like the dollar. I'm not going to sit here and say either way, which way that I'm more convicted, because I think that's the wrong approach. Let price itself be king. If the TNX starts to break underneath the cloud, then I think we're looking really good for a solid continued move up where, bears are just having a really difficult time. Anyone that's trying to short the market, I think if you don't have a sound process and you don't know where to short, you're most likely using the fear to get short and then you're getting run over. So this is where supply and demand really gives you that edge, folks, is that we're identifying the levels before price gets there, and that is really going to help you out. Please, please, the N in trendy stands for no news. Know when the news will maybe expect, especially like projected news is coming out so that you can prepare yourself. But we do not trade off of news. News is a catalyst that pushes price into the supply and demand levels. Okay. So just please, please remind yourself of that. I'm sure we've shown you the proof of concept several times. Let's go over here and take a look at the skew. You guys know that I absolutely love the skew. We found a level where it just works over and over and over. I took my lessons from 2021, said I would not get caught up into the idea that the market had to pull back just because we were at these levels. So we identified this level. We came up with new levels for 2024, and they have been rocking it ever since. Anytime we come into this lower red line here, is where we buy calls 5 to 10 days out. And anytime we come into this extreme level here, you want to be cautious. So bringing those stops up on the longs, I really do feel like this is the great blueprint that really has helped us out a lot this year, at least for me, to understand where I want to be in my portfolio. And then, you know, we were extreme levels last week, like around 156 or something like that, and the market pulled back. Surprise. And then we came down close to the cloud, and then we started to bounce up. So, again, guys, if we find ourselves down here on the skew, what this means is that the market's been pulling back and right around this level every time since over a year now. This is like where everyone, including the news, social media, people start to get really fearful. And for some reason, it's just holding. It's not until we close underneath this red level for 2 weeks that I feel the high probability suggests that we're going to come all the way down here, which would be extreme fear in the market. Okay. Now, I could be wrong. We may not get a chance where it's 2 weeks and then we sit here and go, okay, yeah, we're going to hit this. It could all happen in 1 week. So please understand that my analysis could be wrong. But for now, we're going to stick with what's been working for over a year now. Okay. Let's go ahead and move. And I apologize. So the skew is at 148. It's still at a level and close to the cloud where we could see a bounce, which if we get a bounce in the skew, it means the market's moving up again, right? So it is at a level where we could see some more greed in the market. And that brings me to the fear and greed index. And the fear and greed actually ticked back from greed to neutral, which is kind of interesting if you think about it, especially after Friday. I would have thought this thing stayed over into the greed, but no, it's at neutral, and that's where we kind of lie. So, right in the middle, if you will. Don't diddle in the middle. This week is really shaping up as I sit here and talk to you, and I prepared this before I started this recording. Is really shaping up to be a very neutral week for me. I'm a little cautious, but I'm also understanding that I do not want to bias as we could see some very nice moves continue in the market. Again, price is king. Let's go to the ESM24. This is going to be my favorite charts that I love to cover when we come in here and do the broad market analysis. I love this. This is the same blueprint we've been using for months. You can see that we identify the inside and up formation here. Price came back after 3 weeks down. It then went bid. We got super bullish here. Things have been really great. Matter of fact, we started our 30-day challenge really perfectly. If you think about it, we pretty much got the this move out of the trendy buy zone. And, again, the portfolio that Melissa's been sharing with you, I think it went from, I think it would probably closed up 60 plus percent, maybe 70% from our 30-day challenge. Again, it's a byproduct of a disciplined approach and a process, but great outcome here, just trading the zones to the upside. Now, what I want to do is make sure that you understand that we made a high 2 weeks ago. We did not make a new high, and we actually have now gone inside and down. So what you should be doing on a weekly is identifying the zone right here, and it's if this then that. If price cannot get over this bottom red line and start to go inside and up, then it is sideways to down until proven otherwise. Okay, that's why I say there's some caution. The dollar, the TNX, even the skew, they're all at that cusp where anything can happen. And the structure is telling me, hey, if this, then that. If price can't get over this, sideways to down until proven otherwise. Now, when I say that, understand we are demand and supply traders. If price is moving down, you should be looking for demand. Okay. So, what happened this past week and why is this important? Here's some notes about the weekly. Price pulled back to the 23.6 and the 38.2 and the 9 EMA. That's called synergy. Everything coming together, boom, confluence. Then you get the big sharp move to the upside. Price for the week closed on a lower high and above the 23.6. Okay, well, that's a good thing. From where I'm measuring or anchoring the fibs, things are looking really good, right? It's still looking pretty bullish. However, inside and down. 618 is aligned with the new inside and up formation. So our inside and up formation, I understand that I still have this on here, But if you wanted to, you could take that green box and put it right here. That would be your new inside and up formation. So understand right now 618 is confluent with the inside and up. The 9 EMA is still confluent with the 38.2. Every day, just kind of check this towards the end of the day and look and zoom into your 9 EMA and see which way it's pointing. If these start to slope down, that's not typically a good sign, as it looks like price will continue to the downside. Okay, so just take little notes like that to yourself. All right. All right, so the next thing I'm going to do is come over here to the daily so you guys can see our new levels. One thing I really want to point out here, we were here when this happened and it worked out very well for us. And this week we were here for this and it worked again. So we did take out a few used up zones on smaller time frames, but at the end of the day, this zone did work very well. These are my new triggers going into this week for um, the daily chart. And again, I annotate why I'm putting these on here so that you understand. All right. So I'm using the WE, which is the lower weekly edge. This is also an inside and up formation. One big note here, this has now been tested once and now twice. So this means that, if price comes back down here, the chances of it working again, they start to go down every time we test it. All right. Now I'm using the upper weekly edge as your resistance level, and I have an all-time high or a fib extension up here for a short trigger. Moving on, let's go into the 4 hour. These are the same levels I've been showing you for many weeks now. Again, we came back here and we came back again on Friday and it worked very well. Caution if we come back in this zone again, as I would imagine we're probably coming down to test these zones down below. Again, now we're approaching on Friday's move up, we are approaching a zone to the upside that could cause rejection. So if tonight we open up on exuberance from Friday, then you could be opening up into a level of resistance. Now, please understand, just because we are, let's say that we open up into supply tomorrow, as long as we are in this red box, the bears can kick you out at any time. But I like to look at this level and say, okay, as long as we're in there, my stops want to come up and I want to stay long as we can stay above that level. And that's how we approach the supply zones from a long position. And then we also use our Fibonacci's like we taught you in that last week's class. Okay. All right, guys, so that is the 4 hour. And then let's go over here to the NASDAQ. We're going to go into the NQM24. Same thing. I want to take you to the weekly and I want to go over some important things here. Again, my sentiment, if I didn't say so, is cautious this week. Please understand that, and it's for, I believe, good reason. Yes, we had a nice little bounce, but we need to get through a couple more things before I start to really feel like, hey, this was a solid bounce and we could see continuation. But again, price will be king. So these are my notes. The 23.6, 38.2, and the 9 EMA, just like the ES futures, worked very well. We had all these levels here in advance, just like we always do, and that is the edge that we're giving to our members and to our trading. The 618 is aligned with the new inside and up, a lot like the ES futures, and we did make a lower high, so that is noted as well, and price closed just below the 23.6. So again, not extremely bullish, not a nice bounce like the ES. And what I mean by that is when I measure this candle, it just didn't move up as much as the ES futures. And once again, this is a channel that I noted several weeks ago saying, hey, in my opinion, we really haven't done much. This was the best thing. If you understand supply and demand, this is where you got long and you did really well. But far as like price action, what I wanted to see last week was for this candle to close above this channel, and it didn't do that. Matter of fact, it came right back into the same channel. So here we are again, just hanging out in this channel, and we've been here for quite some time. All right. The real move is when we can actually create a base above here and start making a higher high and creating a base on top of the old channel. We have not done that yet. So again, a little cautious here. Let's go ahead and move into the daily. These are your new levels. Go ahead and annotate those on your chart right there. And once again, guys, if you haven't done so already, please give a like to this video. And if you appreciate this video, you can make comments if you like. I really like to know that because I do this as a free gesture on my Sundays. Matter of fact, I'm getting ready to head out to Tallahassee for an orientation with my daughter because she's going to FSU this year. And so we're very excited for her. So I'm going to be out of pocket Monday and Tuesday. I'll be back Tuesday night. And then on Thursday, we'll be doing another class called Zero DTE. So we're really pumped up to do that. That's 7 p.m. Central. If you guys upgraded to the Elite package, then you will have access to that in the classroom. So again, Thursday, 7 p.m. Central. All right. Let's go ahead and move on to the 4 hour. Same thing. We came into a zone that we had already annotated for you weeks ago. We came into that. We found buyers, but kind of like the ES futures, we just kind of bounced up into resistance. So this will really be that level to know whether or not, are they serious about the bounce, or was this just some volatility that came in at a demand zone that pushed traders right into resistance? This is overall, again, my blueprint for this week. Please take note that my overall sentiment is caution. It is sideways to down until proven otherwise. If you want to use something that will really help you, I believe the 4 hour is like one of your first go-tos. Notice that on the cues, we're still underneath the cloud. What we want to see is for a price to get above the cloud and stay above this level and continue to stay there for at least 2 to 3 days to feel convicted. We are still in supply if we get up here, so know that they can kick you out at any time. So again, you want to step with tact, be nimble, get out of your profits a little bit fairly more quicker than you would any other time because we have not proven ourselves. We are lower highs here and we're bouncing from demand zones. Other than that, it's just noise, everything between that high and between that Friday low. Okay. All right. So that's what I have for you guys. I hope you have an amazing 2 days to the start. I'll be back, like I said, on Wednesday. You guys are in great hands. As you know, Melissa will be there with you, and I'll probably be listening in from my phone here and there. But again, can't wait to trade with you when I get back. Have an amazing day. See you soon.